Hey guys, my name's Ravi Sharma and I am the founder and head buyer's agent at Search Property. Thank you so much for joining me on another episode of Search Property TV. Today's episode is basically going to answer all your questions about the predictions for the property market and what effect coronavirus is actually going to have. This is a no bullshit approach. I really want you to stick with me here, and if you've ever had any sort of doubts about what's happening, are you reading media articles that are saying 20 to 40% market drops? This is the video you need to watch, and if someone else is questioning that for you, then you need to send them this video. I am definitely passionate about people building financial freedom through investing in property, but I really want to show you what is fact from fiction, okay? So let's kick in right now. We're really looking at the property market. So the property market predictions, okay? My handwriting is terrible. It's been a month of me doing Search Property TV and I still haven't improved. Guys, the biggest message I want to take you to understand here is that I, like most other professionals, would rather be 1 month early than 1 minute late. Now, what I mean by that is that if we are seeing that the fundamentals will return and that the growth indicators are already in place, I would rather be early, buy under market value, sort of ride the wave, and that may shift down a little bit, but if that means I can have an entry into the market before we've actually kicked into FOMO Nation, where everyone is going to jump onto it, I would rather be a month early than 1 minute late. So that's my overarching message here. And I really want you to understand that the government, the media outlets, and all that own the media outlets have an agenda. They really want to push something for you guys to feel a particular way. And it really comes to me as it coming across like fear is the biggest advocator for what they are trying to achieve. So what I mean by that is they really, on one hand, are trying to pump the system in with stimulus, but they're also asking for a lot of you guys to save your money. Because if you're scared, it's okay to be scared. There's a lot happening. There's a lot of uncertainty, a lot of unprecedented words being used, right? Because we're in what I call a black swan event. It's a once in a lifetime. Some will see it as an opportunity, but others will see it as just a pure event that's going to break apart a lot of families, people, jobs, and businesses. So I'm here to educate you, not because I want to convince you of anything. I would love for you to use my buyer's agency services, but I really want you to get educated. I really know that going through the schooling system, I didn't get taught these things. I had to learn them. I took accountability and I took the initiative, the proactive steps to try and learn this. So now I'm here, and if you're here with me, then I want you to understand what we're trying to achieve, okay? So they're really using fear. Now, my first point is that there are a few factors that are playing a part in what will happen in terms of sales volumes and price action. Now, most of you will just be concerned with price action and, hey Ravi, tell me simply, is the market going up or is it going down? Well, if that's all you're here for and you don't want to understand how it exactly works, I'm going to do it right now for you, okay? So if we're looking at price, right? We're looking at price and this is duration. So we're probably, if we were in 2018 here, the market had already gone and significantly slowed from here, okay? And that was because of APRA coming in and putting all these lending conditions and stopping them from us from buying or, borrowing more funds. Now, something important to note here is, and I don't want to spend too much time because I know the video could become quite lengthy, but I want to be as detailed as possible. I want this to be the only video you need to watch when it comes to property and looking at what's going to happen in the next 6 to 9 months. Now, time of recording this, we are in what is the date today? Today is the 10th of April. So I really want to make sure that you stay relevant, when you're watching this in say 2 months time, you need to understand where we are in the market today. So 10th of April, that's where we are, okay? So APRA comes in and they put all these lending restrictions. People, you know, interest only loans, see you later. They had all these buffers that they put in place. Now, the reason they did that was because they needed to slow down the housing growth. They needed to slow down the market because affordability was an issue. Normally, back in the day, 5, 10, 15 years ago, what they would do is RBA would step in and they would increase interest rates. As soon as they increased interest rates, you then had an influx of people that were thinking they could borrow, cannot borrow anymore. They couldn't afford their existing debt. So what they would do is go, investors like myself would pretty much back off and say, cool, no worries, interest rates have gone up and that's why I'm not borrowing. But they couldn't put up interest rates in 2018. And I'll tell you why. Because if people were borrowing at say, I think the cash rate at the time would have been about 2%, right? So if people are borrowing at 2% and suddenly it goes up to 2.5%, the debt that was acquired in this factor here was purchased at 2%, but now they're having to pay it back at 2.5%. And that would have caused a major upset in our economy. And this is very interesting, but also very important to understand because people are asking me a lot. They're saying, hey Ravi, this is all great when we've got low interest rates. What happens when it goes up? This right here should enable you to understand why interest rates cannot go up, at least for the foreseeable future. The RBA met earlier this week and they basically said, look, we're gonna hold our cash rate. Now, mind you, we're at probably like 2.5% around 2018. We are now at 2019 and at 0.25. So let that sink in. It's 10 times less than what it was pretty much 2 years ago. We're actually in 2020. So 2019 goes there and 2020, all right? This year's a blur. It seemed like March went on forever because of the virus and everything, but now this is where we're at. So 0.25 in 2020. So we've got this slowdown, right? People are now coming out of the market. And then what we see is that it's pretty much sort of plateaued here and about here. This is an important point. May of 2019. May was the election. As soon as the election came through, we then have 3 rate cuts in the space of 4 months. And we have now rectified or identified really that we have a major issue in our economy and the problems are starting to come in. Now, if the economy is doing well, they don't need to cut rates. This is something you need to understand, that if we're having rate cuts and so many so quickly, when was the last time they did this? They did this during the GFC. So when people say, hey, you know, Ravi, you've only been around in terms of search property for about a month now, everyone that was close to me, I was warning them of this probably around August, September, when it became clear that we are headed to a major economic disaster and now we're seeing it unfold, okay? So we get these rate cuts and all of a sudden we've got price action all the way up and here we are in 2020, okay? Now, you haven't seen in some areas the price go back to the same levels we had probably about around here with 2017, but we were getting very close to it. We were not far, the trajectory was there, the fundamentals were there, and this time we were supposedly stronger as a financial system to go surpass that. But then happens what we call COVID-19 or coronavirus or corona scam for some people that don't believe it. So the virus happens, okay? Now, the virus has really changed up what's happening. And I guess, yes, back to the question that most of you guys are thinking, is property going up or is it going down? I wanted to show you some context because a lot of people can sort of come into this video, listen to 2 minutes, get rah-rah about it and go, yes, I know what's happening. They run because they don't have enough patience. You need to slow down. You need to understand all these steps. You need to understand cause and effect. I'm not here just trying to be your buyer's agent. I'm trying to mentor you. I'm trying to educate you so that if tomorrow you do decide that I don't want to use Ravi's services or that you parents have a property and they don't know what to do in this economic climate, at least you can offer some sort of help. Don't be a doormat, don't be an idiot that's so ignorant towards what's happening in the world because you'd rather spend your time looking at memes. Now, there's nothing wrong with that, but what I'm saying is there are other people around you that rely on you. So you should take that ownership, become accountable, and if it's not for yourself, do it at least for them. But this is why I stress that it's important to understand context, okay? So this is what's happened in the last 2 years, and this is where we're at. So this here, from here to here, we have seen good fundamentals. What I mean by that is our net migration has increased. We're seeing certain suburbs and certain pockets of areas really experience some nice growth. Now, obviously the way the media sort of illustrates these growth patterns and data sets, it's very much a generic approach. So they'll just go, Sydney went up by 13%, Melbourne went up by this, but there are subsets in those markets. So there's sub-markets within the market. And then once you get into those markets, then you've got pretty much streets that grow. Certain streets won't grow. Certain properties on those streets grow. So it gets very minute in terms of detail. But what's important to know is now we've established where we've come from. We need to establish where we are and where we're going. So let's just redraw this up again so that we understand what is happening. So if I was to do another map, another graph really, and we are here, current. Okay, so we're here current, it is April 2020. What we're looking at is what's gonna happen and 2021 is here, okay? So we're really looking at what happens in the next 8 months. So we are probably at this point here, and now the market is shifting down. Now, when I say the market is shifting down in terms of price activity, I don't mean every single market is going down. I'm saying that if you're top, when I drew the pyramid in terms of my last market update, if you haven't seen that, pause this video, go and watch that. It's like 20 minutes, watch that, come back, right? Because what I mean by that, and just quickly for anyone that sort of missed it, is if your medium house price is here, so that's the median house price, you've got all these borrowers under here, right? Under the median. All the properties that are in this section are generally found to be affordable. So these are affordable. All right, that is terrible. I have to rewrite that. Put a little bit more effort there. Afford, oh my God. Okay, they're affordable. The market that is going to drop during this recession, during what is about to happen, will be anything that pretty much sits in this area up. So all of this is what we call the more prestigious market, the upper echelons of the market, okay? This is what's gonna be affected, and this is where you will see, whoa, my bad. This is what we'll see is going to see the biggest price action. So if you've got properties that are like worth, say, 2 million, could you see 2 million being sold at 20% less than that? So that would mean 1.6 million. Could you see that happening? I definitely could. So when the media is coming out and saying, yes, 20% market drops, we're gonna see it in here. If there is ever gonna be a drop, we're gonna see it there. Do you see properties that are selling for, say, 400,000 dropping by 80K to become 320K? Do you see that happening? That, I can tell you right now, if you understand how fundamentals work, is a lot more difficult to have happen versus that. And the reason for that is because you have the majority of buyers that can afford in this market. That means that as long as there is demand, right, you're gonna have price action pushing up. Here, we only have this amount of people, right? People that are making an average wage, they can afford anything around the median, but they cannot afford a $4 million house. So The buyer's already restricted. There's a lack of demand in the beginning. That's why prestigious homes take so long to get sold. But when you're in this affordable sort of market, you've got everyone up here can also afford down here. So say someone owns a $4 million property and they've got $2 million worth of equity. They may go, hey, you know what? I'm not gonna sell my house. I actually wanna build my wealth. And this is why the rich get richer, because they've got a $4 million house, it goes up by 10%, they've got 400K in equity. They can now either buy another prestigious property, or if they're smart about it, they'll go back into this market and then buy anything that's cheap. So markets can't have 20, 30% drops in this section because you're gonna have all of these people that are pushing to buy this property. It's just supply and demand. And as long as there's demand, you can't have prices go down. So when we go to, we're gonna see a bit of a drop, yes, we will. But it'll be very small and it won't be affected everywhere. So I'm not really interested in this market. Doesn't bother me. In terms of my clients and who I'm talking to, they're not looking here. That's not a good investment choice, right? I can tell you that now. What you want to be looking at is the affordable market. And the reason for that is because you have the maximum amount of buyers there, okay? So now that we've illustrated what that means, this here is what is going to happen. We're gonna see, so we're probably there. So let's say if price kept the same, so there's no change. Here we've got probably about 10% there, and we've probably got about 5% there, okay? I think personally, depending on which market you were seeing, the markets that I'm looking at, I am forecasting that we will see a maximum drop of 5%, right? I would be very surprised if I was seeing in the affordable market in the suburbs I am looking at that have such good growth fundamentals that we are gonna see a decrease in price by more than 5%, okay? So this is what I foresee happening. Over the next 2 to 3 months, we may see a 5% drop. But as soon as one of two things happens, one, the virus is under control, we are flattening the curve already, right? So if we are able to manage it a lot better, we are then put into a position where we can get through the lockdowns. Suddenly businesses start operating, people are back to everyday life. And in Australia, we may be okay, right? I still foresee a recession definitely on the cards. I'm now questioning whether we'll go through a depression. So recession is 2 negative quarters of negative growth, and a depression is 4, okay? So we go through, and this is what I expect will happen. We either see lockdowns decrease and a virus vaccine is announced. As soon as we know these things, the certainty and confidence comes back into the market. And what we are going to see is we're going to see this go and sort of flatten out, because in this period here, right, in this period here, everyone is unsure. Right now, people who own houses, they're not selling because they're just deferring payments. People who are looking to buy are scared, like yourselves. You've probably got cash, but you're like, no, I want to wait because I read that markets will come down. We're going to address this big concern right now. If you are waiting for this market to capitulate, if you're waiting for this market to just drop by 20%, the property market will not do that. If that's all you came here to watch, you can leave now. But essentially you need to know cause and effect. There is credibility in what I am saying here because I understand how macroeconomics works. So in this period, you may actually have 2 properties go on sale in a suburb, right? It's an example. So you may have 2 properties in a suburb go on sale where traditionally we had 5 or 6 in that period. So what that means is, as buyers have decreased, we're also seeing a lot less houses go on sale. So if there was 4 people after 2 houses, well, what's gonna happen? You've got more demand for the supply, which means in that market, the prices will go up. But if you flip it around and there's 4 people wanting to buy 8 houses, well, now they've got choice. So now they're gonna go, hey, 4 people are gonna go, I wanna put an offer here and I wanna put an offer here, and I don't really care who takes it because the vendor has no choice, right? It's a buyer's market. That's what you call is a buyer's market. Right now is a renter's market. And just with the announcement of Airbnbs becoming illegal in New South Wales, you've got all these properties coming back into the market, which means if you're renting currently, you could pretty much get a lower rent. For people who haven't started renting, they could go out there and find properties listed, but you could ask for a negotiation, you could ask for a reduction. So it is a renter's market, okay? So we're gonna see this period, and I expect that it's gonna be about 2 or 3 months of this uncertainty. We're already seeing positive news with the coronavirus in terms of how we're dealing with it as a country. And then you're gonna see an absolute growth period that we've never seen before. Now, I say this not because I'm in the property market, but because I understand how it works. Now, let me explain why this will happen. There's a few factors that you need to consider, okay? Normally, what happens is, say for instance, the GFC or any other economic disaster, you would have the recession period would start from here and it would end here, okay? What would happen is as soon as we get to about here, we're gonna announce stimulus. And then we're gonna get to here, and we're gonna go stimulus. And we're gonna go here, and then we're gonna go stimulus, okay? So stimulus is just government sort of giving you money, they're printing money, they're buying up government bonds. There's a lot of ways that they can do this. It's called quantitative easing. That's what they're doing right now. So what they'll do is they'll go, let's pump the economy. So they'll go, hey guys, here's $1,000. It was like when Kevin Rudd did it, right? Everyone got some money. And then what they expect you to do is then use the money, circulate that by buying a new TV, buying a camera, going on holidays. Now, in this case, you can't go on holidays. But what's more important here is during the GFC, we spent about, I think it was 100 billion, okay? During the whole GFC. We are currently, we're in April, we haven't even seen a quarter of negative growth yet, right? I think the numbers may have come out, not sure what they look like, but what's important here is we haven't even seen the recession. We haven't had 2 consecutive quarters of negative growth, so we haven't seen the recession yet. We have spent over 300 billion and we haven't even seen the recession. This is why I'm saying, if you haven't watched my market updates, you need to understand what I'm saying here. Guys, if we spent 100 in the entire GFC to get us out of the recession, we're at 300 billion before going into recession, and they're trying to tell you that it's because we're trying to keep people in jobs. It's a load of shit. What they are trying to do is they're devaluing our money. The amount that we can have in terms of buying power with that dollar is a lot less today than it was 5 years ago, right? So 300 billion, we're here, right? We haven't gone through this period. During this phase, they are gonna pump more and more and more stimulus, right? More money, more government spending, all those projects they had planned, like maybe there's the new rail that's gonna go in a particular area. These regional towns are really gonna have their time to shine now because all those projects they had, they're like, hey, you know what? In the regional areas, the virus is actually not that bad in terms of, community transmissions and stuff. So they bring them forward. Now they're going, let's have these government incentives. Let's have these government projects, have them happen now. People are gonna go to these areas. They've got jobs. People are spending more money because they've got jobs. It's insane. What they are doing right now is insane. And this is why I say, if you have money in your account, if you literally went 5 years ago and spent $20,000, you would buy a shitload more than in 6 months' time, you're $20,000. That's a fact, right? So this here, oh, okay, great. We're gonna have really low interest rates. Yes, great. These are all the things happening. I'm gonna put up a graph right now. Read this graph. It seems simple. I'm just gonna walk you through it. Basically, what this graph means is that you have periods where it's stagnated growth. There's no growth. There's a flat period. And the only thing that pushes Property prices up is when there is QE, when there is stimulus, when the government is printing money. And this entails why property prices always go up, and they will continue to go up because of modern monetary theory. And this is basically it. The prices of property to you and I look like this, okay? Over time, it'll grow. The reason for that is because the value of our money is going like this. What does that mean? It means that back in the day, if you could buy a house, so let's say this is 20 years ago, you could probably buy a house for, in Sydney, let's say it was 100K, okay? Now everyone sits here today and go, oh my God, I could have bought 10 of those and that's like the price of one house now. That's because the value of money was at the highest point. This is how much it was worth, but this is how much it was buying. So at the time, people were also making money in accordance to the 100K. You get that? But as time has gone on and the monetary policy is the way it is, you had interest rates back here like 19%, people going, oh my God, you don't know how hard it was, right? You go from here and now we're at 0.25%. You've got properties that you have to buy the same thing. The 1 million is probably going for 1.5 million now, right? It's because our money is losing value. So if we're losing the value in the money, right? We have inflation, right? So inflation, which is how we know that certain things have happened, right? So we would go, okay, cool. So we've got a paddle pop used to cost $1, right? So let's go paddle pop used to cost $1. And now a paddle pop cost $2.50. That's the basic understanding that most people have about what inflation looks like, okay? Right now, they are saying that they are not going to move the cash rate, which mind you is at 0.25%, until we get into the bracket, which a healthy bracket is between 2 and 3% of inflation rate. We're currently at 1.8%. Now, if they're forecasting that we're here, we're gonna see a lot more happen in this section. Unemployment's gonna go up, right? You're gonna have all these people distressed. They can't make their repayments. But this is something important to know. Vendors will not sell unless they're extremely desperate. And this is why I am saying you are never gonna get a better chance to buy property this cheap. You will never get it again. And the reason for that is because in this section, anyone that wants to be selling, right? It's probably around here. Anyone that wants to sell in this section has to sell. So if you could keep your repayments on pause, so you can't afford it, you've lost your job, you can defer them. So that means you can get through this period, you'll be here, right? But if you are looking to sell right now, it's because you may be moving houses. That's your principal place of residence, you're moving. You may have other projects you need to put that money into, like a build project or construction, something like that. Unless you have to sell, you won't sell. You'll just wait, you wait through and get to this period, and then we're gonna have the biggest growth cycle we have ever seen in our entire lives. The reason for that is because what they were spending, GFC, 100 billion. We're already at 300 billion. Think about how much they're gonna pump into the system to try and get us out of this right here. We're not even there yet, but they're gonna start pushing in more money, and when more money comes in, you lose value. You lose the value of your dollar. So we're gonna continue going down, and if this keeps going down, this is the opposite of what this graph does, and this will keep going up. And so suddenly it looks like property that was valued for 1.5 is now worth 4 million, okay? Now, when I talk about what you need to be doing with your cash and why you should be buying is for a couple of reasons. We're gonna see the biggest growth cycle in our entire lives. Put it that way, that we're gonna have short term, and my prediction is short term, some areas will lose value, some places will hold value, and some will go up. I know that's very vague, but this is where the importance of investing comes in. You understand that you need to invest in property, but you don't understand why. I'm giving you context as to why you need to. Right now, we're gonna see the dollar lose its value. So money by value will go down. which then means that the price of house prices will go up. But so will everything else. Everything will go up. Suddenly, if you're getting paid $100,000 this year, in 5 years' time, you're gonna get paid $200,000. That's what the value of that money will be. So if today you had 50K saved, right? You go and earn an interest of 1% or some rubbish in your bank account. That money is not worth 50K anymore. It's 50K today. That's why if your parents saved 20K 20 years ago, 20K would still be 20K now. I mean, you'd get a bit of percentage increase, like 2-3% interest that you were earning, but effectively it's still gonna be 20K. In your case, you're not gonna do anything during this period. You're scared. So you're gonna go, I'm gonna save my $50,000 because I've worked hard. There's a recession coming, prices are going down, so I'm gonna hold this cash. So you're going, I'm bloody brilliant. I'm gonna hold this cash, 50K. When the dollar loses buy power because they're putting more money into the system, that is gonna buy tomorrow, is gonna buy $35K worth. So you've lost technically value. Everything will lose value except one thing. Everything will go up in price and everything will lose value except for one thing. It's the one thing I've been advocating. If you guys don't follow me on Instagram, you need to start following me. I've been advocating this. I'm getting super passionate about this because I understand that if we take a moment and we pause, we are about to enter the greatest period in property, Australian residential property history. I am saying the exact opposite of what these guys are saying, 20 to 40% decrease in value. These people, journalists that are writing 20 to 40% decrease in price, ask them, how many properties do you own? What have you done in the last 10 years? Do you understand how money works? Do you understand how macroeconomics works? No, they don't. They're a pencil pusher. All they do is they write bullshit, clickbait crap, right? Because they know that's what's gonna get the views. And people like you, if you're uneducated, right? You don't watch these videos or try and educate yourself, you're gonna put yourself in a position where you volunteer to understand and get like, try and get like, what do they call it? A brainwash of all this rubbish. I'm saying the opposite of it, right? There's a reason why they are doing what they're doing. There's a reason why I'm here doing this and have $4.5 million worth of assets, right? So, I'm losing my train of thought, guys. I'm getting too excited. So, everything will rise in price. So, wages increased, rent increased, house prices increase, debt will not increase. So, I don't even know why I'm drawing a graph. No time for graphs, my friend. If you buy a property today for $250,000, we know, because of the example I've just shown you, that the money value drops. So if everything drops and now you're making $250,000 a year, you could effectively just buy one of these every year. So that causes this to go up. So now the 250 has gone up and now it's worth 450. This then causes what we call the wealth effect. And the reason it's called the wealth effect is because now you think you're wealthy. You go, hey, wait, my property is now worth $450,000. My debt here was, let's say for argument's sake, was a 200K loan. Okay, so does my loan go up? No, it doesn't. Your interest rates might go up, but that's not gonna happen for at least another 5 to 10 years. And even if they do, you could just fix them, right? So effectively, today you purchase in today's value and the debt is in today's value. Tomorrow's value, your price has gone up. It's now $450,000, but your debt stayed the same. So what you could do is imagine if you had 5 properties, right? You had 5 properties, you purchased them all at 250, and so that's equals to 1.25 million asset value, and the loan was 1 million. Now, if the value goes up, which it will, because we've understood how it works, and this is why I said context is key here. You understand why I'm saying the property prices will go up. So then you've got this valued at 450. So now you've made a profit of 200 on each property. So that's $1 million, right? All you'd have to do is literally get 2 of the properties or 3 of the properties and pay down that, and you'd have 2 or 3 properties for free. And that is essentially why we are in the greatest time to be purchasing property. It's better than anything I've experienced. It's pretty much going to be better than anyone experienced over the last 10, 15, 20 years. And why I'm saying you need to align yourself with a professional that knows where to be purchasing these. Not everything is going to go through this growth. Not everything will, right? There are certain pockets, there are certain streets, and that's why you need a professional on your side to know how you can realize this. Guys, it's not super complicated. I've tried to break it down, each part of this video. If you aren't understanding any of this or parts of it, go back and watch it. That's the beauty of YouTube, right? I'm going to be pushing this video on my socials for a while. This is the only video, only sense of non-bullshit, no clickbait crap about what is happening with Australian residential property prices and why the coronavirus, right? The pandemic is simply exposing our system. If you are looking hard enough, if you are taking action and understand what is happening, you will understand that the virus was simply a pin. The financial system is fake, and the pin came in, popped the entire bubble, right, which is the financial system, and you're gonna get into a situation where the only way to protect your cash is going to be by having your cash attached to hard assets like property, because then you can have debt, right? If your asset goes up in value, right, it's going up in value in your head because you're getting the wealth effect, it's because the dollar has lost its value, not because the property prices are going up. The dollar value has lost its money buying potential. So if you keep it in your bank account, you are accepting this is the truth. You are pretty much going, today you walk into the bank, you take out $10,000 and flush it down the toilet. That's what you want to be doing. If you are holding cash right now, in the next sort of 6 to 9 months, if you aren't going to take action with that cash, you may lose the opportunity to ever actually do anything with it. And if you do, and this goes back to my core message, which I've been saying all along in this video, is that I would rather be a month early than a minute too late. Because if we buy in April 2020, let's say we buy here. Now, all of our properties, we're trying to buy under market value. So if we bought under market value by 10%, right? So we bought it under 10%, so we've got some equity there. For the next 3 to 6 months, we see a decrease by 5%, right? We're still better, we're positive 5% here, but now we have secured our real estate. We've secured our real estate for the growth that we're gonna see of whoever knows. I predict we could see numbers anywhere from 15 to 25% of growth. And I know some of you guys are sitting there and going, this guy's a load of shit. I don't understand how he's getting these numbers. If I told you 2 months ago that we would all not be allowed to leave our houses, we're not allowed to leave home, we can't meet other people, we can't meet friends, and there's social distancing is a thing, you would have thought I was an idiot as well. I am saying today that we are going to see the greatest property increase in price action in our lifetimes. This is a black swan event, guys, okay? Get educated as quick as you can. If you need the help, contact me. But if you can secure something now, you've got to ask the question, if you purchase here, maybe they're available. You purchase here, maybe there's a few less available, but now the buyers are coming in, they're getting a bit more confident. But what most people will do, and you're not those people, the 99% are gonna buy here or want to buy here. And FOMO is gonna kick in, and that's just gonna fuel this. And most people will end up buying about here, and that's when they're gonna get screwed over. Guys, thank you so much for sticking through with me on this video. I take a lot of passion in this, obviously, spending 30, 40 minutes talking to a camera by myself and writing on the whiteboard, despite my handwriting being terrible. I'm trying to bring you value. I'm trying to teach you things that no one else taught us, okay? Right now, if you've got cash, please, for the love of God, if you have taken any sort of value from this, watch the market updates. There's so much content I'm putting up. Take the action, right? If you are thinking that the share market has collapsed, if you think it has bottomed out, I'm telling you now, if you want to take this as a prediction, you may never want to touch the share market. You've already invested, whatever that case may be. I am saying between July and October, we are going to see the bottom of the market for the share market, and it's going to go through the floor. Whatever numbers you thought were going to be it, forget them. I've had to relook at the numbers I'm predicting for those because it's going to be terrible. Look at where we are as Australia, as a nation. We're already looking at positive sentiment, right? But we're still going to go for a recession. We're still going to go through a downturn of some sort. Europe, parts of the US are seeing the deadliest days in coronavirus every single day, and it's rising. That is a concern. What it means is that there's going to be more lockdowns, and the economic effect of that is not actually going to be felt for a while. Because you know what happens in July? A lot of these companies have to report their profit and loss for their shareholders. It has to happen. And when that comes out and these companies are actually insolvent, they're bankrupt, that is when you are going to see the floor broken through of whatever resistance or technical analysis you want to do. It's not going to save you from people's perception of fear. And we are going to be in a position where the share market will lose a lot of its value in a short amount of time. You have a short window here to take advantage. I'm going to expect that I put this video up here in the cycle. The smart few will talk to me there. A few more will talk to me there. And then everyone's going to want to talk to me here. And I have no time. And in this section here, we actually can't get the bargains anymore because there's a lot of idiots running around. And that's where you're gonna just basically gonna have to strap in and watch your dollar value lose its value. So the cash you have in your bank, you're gonna sit there and you're gonna make dumb decisions if you're gonna purchase investments because now FOMO's kicked in and you're just like, hey, it can't go down. Just like everyone was buying Bitcoin or buying in Sydney a couple of years ago. They're like, no, Sydney could never fail. It failed. It went down, right? Just like Bitcoin. And although I'm bullish on cryptocurrency, I understand how people are thinking. I understand consumer behavior. And this is when they start seeing green, growth is happening. That's when people want to invest. Don't be the 99% of people. Contact me here to here. Please take advantage of what we have here, guys. I wish I could just go up and buy all the real estate possible right now. I would basically be betting my bottom dollar, leveraging 100% to try and get in. Unfortunately, I can't, but things will change. Financial systems will change. Life will not be the same as it was before. Guys, thank you so much again. If you haven't subscribed already, please do. For the fact that I'm just like, I need a drink of water, I need to calm down, I'm sweating, but I want you to get this value, a no bullshit approach to what residential property will look like, the forecast, and enjoy. I'll catch you guys in the next video.